business. We're starting with Twitter, which puts shares on sale today.
That's right. Puts shares. It's not that easy to say.
No, shares
but
on sale.
it's fairly certain, though, that this is the most eagerly awaited share flotation this year, and certainly since we saw Facebook, which was about 18 months ago. Twitter shares will be on the New York Stock Exchange later this Thursday. The price, $26 per share. That's the opening price. So everyone will be very interested to see whether they go up or down. Remember, Facebook, it was a story of them falling. Well, let's bring in an expert to talk about all of this. We're going to cross over to London to talk to Alistair McCaig. He's a market analyst with the IG Group there. Thanks very much for joining us, Alistair. First of all, tell us, you've got your ear close to the market there. How much interest is there in this flotation?
Morning, Matthew. Yes, it really has taken the interest of traders. I guess the fact that this is a social media outlet ensures that there's a natural interest in it anyway. I mean, any format that can get users as diverse as our Prime Minister here in the UK, David Cameron, Usain Bolt and Lady Gaga ensures that there's a pretty wide spectrum of interest. And certainly, as far as the trading is concerned, I guess we've seen similar sort of volumes that we saw in the run-up to Facebook. And more pertinently, as far as the UK is concerned, the Royal Mail IPO earlier last month.
Now, Alistair, Twitter hasn't yet made a profit. Is that a concern?
Yes, it's always a concern when you look at a company that's at such an early stage in its development. But this is an issue that so many technology companies need to sort of cross, as it were. It's the monetization of their user base, while at the same time trying to ensure they don't alienate their users. The funds being raised here will undoubtedly look to change the company. They've seen their staff numbers almost double in the last year alone. User numbers have doubled. Obviously, costs have gone up at the same time as well, and they will be looking to change the structure of the business somewhat and try and ensure that they can bring a revenue stream in that meets their costs.
And of course, advertising very important to them. But is there a danger to a certain extent that the more advertising they put in these Twitter feeds, the more users will be put off and go elsewhere? Is that a concern?
Yeah, that's very much a concern. I think there is. We should really make sure we understand the differences here between, say, Facebook and Twitter, both social media outlets, but at the same time very, very diverse in the way they're used. Facebook tends to be a platform that people look at less frequently, maybe once a week, once a month, maybe even less frequently, whereas Twitter seems to be a platform that people use at least once a day, if not multiple times a day, a constant news stream. And the other interesting aspect about Twitter is that over 60% of the global users of Twitter do so from mobile devices, and these mobile devices, smartphones, Androids as it were, all have GPS systems built into them, and so advertisers will be able to maybe more directly focus in on a target market, meaning that they won't need to bombard so widely with their advertising, and maybe focus more directly on people, certainly geographically speaking and demographically speaking as well. So maybe they might be able to rein that in slightly and ensure that there isn't quite the saturation that we see in other formats, but it is a real concern, yes.
Okay, well, interesting stuff. We'll all be watching to see what happens later this afternoon. Thanks very much, Alistair McCaig there from IG Group in London.
Now, ahead of that flotation, what's the mood in the markets this Thursday?
Well, actually, there's quite a bit of caution around Shona. That's because there's a few things going on. Now, first, let's take a look at the Asian markets. You can see there, they're all slipped back in this Thursday's trading session. And here in Europe as well, we've seen a similar story at the open. What's going on? Well, a few key meetings happening, actually. One of those right here in Europe. Policymakers from the European Central Bank will be getting together in Frankfurt. Now, a number of indicators have caused a bit of concern lately here in Europe. We saw, for example, that inflation has softened 0.7% in the Eurozone. That's worrying. Also, we saw a downgrade, remember, earlier this week of some of the forecasts for growth in the Eurozone. Now, that's stoking some talk of whether the European Central Bank, led by this man, Mario Draghi, will perhaps do something to help the economy, perhaps a rate cut even, although a poll by Reuters of 23 economists found that 22 of them say there won't be a rate cut, so they're not expecting it. But we'll hear more from Mario Draghi 2:30 p.m. this afternoon, European time, on what exactly the central bank is doing.
Excellent.
Should we get some results as well?
Yes, absolutely.
Let's get a couple of company results that have just come out here in France in the last few hours as well. Societe Generale, second biggest bank, just over 500 million euros in profits, 6 times, in fact, what they did last year, and their shares up 0.7%. Credit Agricole also reporting better profits, as you can see there. That's all from me.
Well, we've been talking Twitter, so don't forget you can find us all on there.
You can find us there. Shona's there, and I'm there too. If you want to get more from us, and we promise we'll tweet more as well, then you can find us both on Twitter, as you can see there.
Thank you, Matthew Warren, with that business update. And now, time for the papers.